Yeah, Oracle's down in the pre-market trading this morning, extending yesterday's losses after the firm reported disappointing second quarter earnings. Here to unpack the numbers is Rishi Jaluria, Software Managing Director for RBC Capital Markets. Rishi, thank you very much for joining us.
Thank you for having me.
What was the most concerning number for you on this?
Yeah, look, I don't think that there's actually one specific number, right? We can point to OCI, we can point to some of the top line metrics, but really, I think it's actually more of the qualitative that was the issue here, not the quantitative. And really, it comes down to, well, they have these large contracts, they have these large RPO numbers. There's this $300 billion deal with OpenAI. Now, how are you going to pay for this, right? And while the management definitely sounded confident and they talked about their ability to raise capital while still maintaining this investment grade rating, I think there's just greater skepticism. And heading into earnings, I think investors were looking for more color on exactly what were the plans, what were the alternative financing arrangements out there, right? Whether that's doing SPVs like you've seen Meta do, whether that's even working with sovereign wealth funds, right? You have to kind of think a little bit outside of the box. But I do believe there are still concerns over how is Oracle going to be able to meet this demand in the time frame that they've laid out, and is there a risk to those kind of numbers out to 2030?
Cash, you have a question?
Oh. There we go. Sorry. How do you? So when you look at the stock now, do you believe that that's priced in, or do you believe that there's still another leg to go down before we start to sort of see some of the good news start to play out?
Yeah, look, I think the stock is going to remain a little bit of a battleground stock and a little bit volatile, but candidly think the stock is probably generally where it should be trading given all the uncertainty. Now, if we start to get a higher level of certainty over the capital coming through, or we start to see, more positive headlines around OpenAI and their ability to continue growing into this sort of commitment number that they've laid out, I think that could help Oracle stock. But really, I think it comes down to, as these data centers come online, as that revenue materializes, and we actually start to see the margin impact of this, I think that certainty is what could get the stock to work. And on the flip side, I think if there's delays in anything, or you start to get any worrying headlines around OpenAI, obviously with Gemini 3 over the past couple of weeks, that's been dominating the headlines to more OpenAI exposed names. That could lead a little bit of downside. So it really feels like there's a good amount of upside and a good amount of downside, and that's why I'm remaining sector performer on the name, because I really think that it could go either way in a big way. But I think this is pretty balanced in terms of a risk reward trade-off.
And what could be some of the delays? What might lead to some issues for it?
Yeah, look, number one is going to be financing, right? That's probably the big one, and that's why there was a lot of focus on that question on the call. But lots of other things could happen. Supply constraints, right? Whether that's GPUs, and you saw that Oracle is selling their interest in Ampere, which is supposed to be on the chip designing side. Power constraints, you keep hearing that all around there. Liquid cooling is always an issue. Data center leasing. So there are a lot of things that can happen that can delay the timelines of these. But I think financing is going to be the big one that we're all looking for, and just going to be looking at the news and headlines around their ability to raise debt. What do the credit spreads look like, et cetera.
And do you think you think the appetite is out there to get involved with them when it comes to raising that debt?
I think there is, but given that you've seen this AI capex trade, especially on the OpenAI side of the equation, as you've seen that cool down over the past couple of weeks, I think it's going to come at a higher price, right? And I think that's showing up in the numbers is just a little bit of a higher cost of capital here than maybe would have been expected after they reported that big Q1 earnings report that sent the stock up 40% on the day. Obviously the stock's down by my math somewhere around $130, $140 billion since before reporting that number. But yeah, I do think that they'll be able to meet these commitments. I think there is still demand for investing in AI capex projects, but I think the higher cost is just reflecting the lower levels of certainty relative to before.
So you still think there are good opportunities to be had here then?
I think there's good opportunities in the AI ecosystem. Candidly, I'm a big believer in AI. I'm a mega bull on this trend. I'm personally a big believer in buying Microsoft over Oracle, especially at these levels, because I think Microsoft has so many different ways it can benefit from AI throughout the stack, not just at the infrastructure layer, but developer, data, application, security, et cetera.
And what's giving you the confidence on that? Where are you seeing that? Why are you feeling so confident about it?
Yeah, look, I think maybe twofold. Number one, I feel very confident about AI as a mega trend. I live in San Francisco. I'm surrounded by this stuff day in, day out. I'm actually here in New York City right now attending the AI summit. And the big thing is I'm just seeing a lot of this, accelerating interest in AI and really use cases evolving. And maybe 2026 could be the year where we start to see it move from proof of concept and pilot into production. As it pertains to Microsoft, I think there's two things I would point to. Number one is I am seeing a lot of innovation out of them, which, for a $4 trillion market cap company is truly impressive to see. I think the second thing is they're being very deliberate about where they invest their CapEx dollars, where they put their time and attention, rather than focusing purely on revenue growth, right? They want to focus on where's there the durability of those benefits, not just focusing purely on training. And that's where I think I feel a lot more confidence over the durability of Microsoft's growth over the next 5, 10, 15 years. And I think we have to think in those timeframes, because AI is really a decades-long trend ahead of us. This is not just, the past 3 years that we've seen.
Okay, we'll have to leave it there, but Rishi, thanks very much for joining us.
Thank you.
Rishi Jaluria is a software managing director for RBC Capital Markets.